Happy holidays from everybody here at TheoTrade. This is Don Kaufman, December 25th, 2020. Yes, doing the weekend update here on this Christmas afternoon here in the U.S. Virgin Islands. This week's update, we're going to focus a little bit on the quest for gamma squeezes. It's very much on. I'm going to explain specifically what that means. With that, let's get started. Update you a little bit on some of the price action we saw, of course, in this holiday week of trade. Then again, we're going to be headed into another holiday week of trade. So this previous week, it really did start with a little bit of a bang. For those of you that kind of understand, interpret expected move. When I say we started off with a bang, you know, the entire week we were looking for about a $55 move. We got every ounce of that and then some on, of course, this Monday morning. Some of that, of course, also attributed specifically to Tesla and its addition to the S&P 500. But net, you know, after Monday, which was a little bit of shock and awe to the downside, we rebounded. We did, well, absolutely nothing. And if you're kind of curious where the week started, where the week ended, you know, one of the great things about these expected moves, and of course, for those of you that are on TheoTrade, we share this expected move link. The expected moves that you're seeing here, these are hand drawn by me. Yes, there's an auto expected move, but the auto expected move can be off a few dollars in either direction just due to the limitations of some of the variables on Thinkorswim. These expected moves are literally, I hand draw them every single week, and then I update the link on the TheoTrade site. And one of the things that's incredibly helpful with this is where the week started. I mean, it's where the previous Friday kind of left off. So when you look at it, I mean, we pretty much end the week where we started the week, and that's why we say it is massively unchanged for the entire week. Now, is that true necessarily inside of something like the NASDAQ? So I'm going to bring up the NASDAQ. Here's where I'll actually apply auto-expected moves. The NASDAQ completely and totally unchanged. We'll actually flip it over to the IWM, the Russell. The Russell actually finished at the upper edge of the expected move, which to me is unexpected. I mean, this has been the product that just will not stop in terms of upside. You know, in a few sectors that are worth notating in here, the financials, a little bit of a bid under the financials. You start to look at individual stocks, and there's a reason I'm doing this right now. You go to the individual stocks, like, all right, well, Microsoft actually finished towards the upper edge of the expected move. Take a look. Apple actually finished outside the upside of its expected move. Facebook, okay. Facebook, interestingly enough, low edge of the expected move. Amazon, largely unchanged. Okay, Google, largely unchanged, and none other than Tesla. Tesla actually finished towards the lower edge of the expected move. So the reason I'm taking you through that, though, is net, when you start looking at, at the week, a lot of products that actually finished higher. Right, the financials, and that's a fairly large sector, finished higher. Could actually bring up the energy sector here. It got decimated, but there's a number of key products in the marketplace that did in fact finish higher. And you're like, well, then how is the S&P massively unchanged? Large part the addition of Tesla. I mean, Tesla coming in as one of the largest companies of the S&P 500. It really didn't have volatility. In fact, that's the next topic over here. Tesla's volatility is dead. That volatility was all felt effectively on Monday. And that's exactly why I wanted to kind of lead off with this discussion is we now have officially, outside of the monsters of tech, and the monsters of tech, this is a complex symbol that we built. It's Apple and it's Amazon, it's Facebook, it's Google, it's Microsoft, all compiled together. And I've yet to actually add Tesla to this because net, if you look at the monsters of tech, they're for the most part flat, right? Maybe slightly even higher. The energy sector is higher. People, that's enough to bring the S&P 500 higher, right? Okay. Well, not exactly, because again, we've had the addition, if you will, of a wild child to the S&P 500. But that wild child, and one of the most important takeaways from this discussion here, is that Tesla's volatility is going to be sucked out, by the S&P 500. And I'm going to explain for just a moment how this actually works. So here we have actually the S&P 100, and what you get is once you're inside of the S&P 500, or in this case, the S&P 100, okay, you become a portion of what is termed statistical arbitrage. And I'll kind of explain a little bit of what that means. Stat arb, okay, is a trading genre that goes out and it fires buy and sell orders, okay, into literally an entire basket. In this case, the S&P 100. So I'll give you a quick example. If the S&P futures, okay, the S&P futures, let's say the S&P futures are trading right at 3,700. If those were to immediately sell off, okay, say 40 points. So the S&P futures back off by 40 points. And why do they back off? I don't know. News, it's a tweet. They snap down. Okay. Everything in the basket is going to move instantaneously. Like people are like sitting there like, well, can I get involved in this? Okay. This, we're not even talking in fractions of a second anymore. The quotes are coming out now in billionths of a second. All right. Nanoseconds. So moving the basket, and that's what this is about. If the S&P futures move, they have to move the basket, right? And in moving the basket, and again, all of this is done sub-second here, in moving the basket, it would literally fire sell orders into all the components of the S&P 100 in this particular circumstance. Well, Tesla now is part of this larger complex inside of the S&P 100, and the fact that it is a larger constituent of the S&P 100 means that, okay, a bulk of order flow would be driven specifically towards that underlying. It's your Apples, it's your Googles, it's your Amazons. Like everybody realizes what the largest companies in the S&P 100 happen to be. What they don't realize though is that once you get added, okay, to the S&P, that statistical arbitrage in very large part, okay, starts to kind of hijack some of the volatility away and tends to move the marketplace then much more cohesively. Now, this is a 50-50 advanced decline line, 50-50 advanced decline line, but that makes sense. I mean, the marketplace is a little bit of a slop fest coming into the holiday session. But specifically, and getting back down to Tesla, all right, when you bring up Tesla, oh, it's up $15, okay? Yeah, $15 actually brought the S&P futures up about 11. But the point being here, inside of Tesla, and again, it's worth noting, all right, this is what volatility looks like. And this is actually an IV rank. The volatility has completely collapsed. In fact, this is the lowest volatility. We'll actually back up a little bit in time over here. Right? Even some 3 years. This is the lowest volatility, okay, that Tesla has really seen in the entire year. I mean, net, here we are, right? Here we are, and the volatility is now effectively lower. Okay, that was, of course, 2020. The volatility now is lower than at any other point. Right here is, of course, this is actually the beginning of the year, some of the lower points of volatility. We're at the lowest point in volatility right now, and that's your addition to the S&P 500. Now, I'm not here to tell you that Tesla cannot move the S&Ps. It absolutely unequivocally can move the S&Ps. We're going to feel that when it goes through earnings, okay? And that Tesla volatility, all right, it's still there to some degree, but it is being, okay, drastically diminished, and that's exactly what we would have expected. All right, some news around the markets this week. I typically don't mention that on a weekend update, but there's some very pivotal news because one of the things I want to just briefly discuss is that, constantly here at TheoTrade, we get emails, conspiracy theorists about the Fed, and the Fed's moving the market higher. Well, I mean, listen, they've pumped in trillions of dollars, okay, of money, and cheap money into the marketplace. I get it. But for those of you that are the deep conspiracy theorists that the Fed is actually out there buying the marketplace, you have to be very careful with that notion because what I call the Rona relief bill. All right. So this is actually the most recent coronavirus bill that has not necessarily passed just yet. It has not, really received the final administration sign off on it. We'll see how that pans out this week. But this bill has a very specific limitation on the Fed. The $429 billion, okay, in uncommitted funds are now rescinded. Okay, And 5 of the Fed's programs, most obviously Main Street lending program, will cease operations. But there's other programs in there, okay, like going out there and buying like junk ETFs and so forth. All right. The Fed basically just got their hands tied by this most recent relief bill. They would have to have congressional approval to move forward, okay, with some of the previously mentioned programs that were in the original coronavirus relief bill. Some of those obviously impacting market and market operations. But I wanted to mention that because, again, there's a lot of, coronavirus conspiracy theorists out there. So easy with that one. The Fed just got their hands tied. But then again, you do have Janet Yellen coming in January 20th to, no, not run the Fed, now run the Treasury. So what does it matter, right? There's your conspiracy theory for the day. Anyway, I figured I'd mention that one because it was an interesting little addition and something that I don't think I expected inside of the coronavirus relief bill that, again, has yet to pass. This is just something I'm going to mention in passing here. Brexit. It's over. Finally. How many years we're now hearing about this? Okay. I mean, really, the Brexit vote happened in 2016, but we were hearing about it all the way back from like 2015. 5 years of this. It's over, baby. It is done. Let's hope we never have to hear about it again. They're out. They're out of the contest. All right. Next, a volatility conundrum. Something that I wanted to mention that's got me a little bit perplexed in some of volatility. So early this week, we saw some pretty good price action in the marketplace, obviously, again, on Monday. This, okay, is just this week. And this week, we actually spiked over 31 on the VIX, and we contracted a little bit. No doubt we contracted over here. So the volatility contracts, okay, as it relates to the VIX. And the VIX is the 30-day, all right? It's 30-day SPX volatility. It is basically an average of the 30-day option volatility in the SPX. So the VIX contracts to a larger degree, right? But then you start cruising down to stuff like VVIX. So the VVIX, it too, earlier in the week, it spiked. Okay, and this is why I'm calling a little bit of a volatility conundrum. So this is the previous Friday. So early in the week, it spikes, and we get clear up and close the day close to 122 on the VVIX. Now, for those of you that don't know what the VVIX is, it's the volatility of the volatility index, right? Volatility of the volatility index, it spikes to 122, which is just like, duck and cover, get under your desk. It pulled back, but it only pulled back to about like 115. And that's actually a big question mark, okay? Professionals, they didn't bail their hedges. And again, the reason I'm bothered by this is it's not because it didn't contract. It did contract to some degree. It didn't contract way back, and I would have anticipated it to contract much further. The reason being, you're coming into another holiday week of trade, right? And this is actually proclaiming that, yeah, the risk actually came off a little bit, but not all that much. So if you're looking at the VIX, you're kind of getting a little bit of a false sense of security. You look at the VVIX, which again is the volatility of the VIX, and it's telling you, well, quite. But last, but definitely not least on that particular front. So you got the VIX, right? Then you got the VVIX, which is the volatility of the VIX. Then you got SKEW. Now, if you've never looked at a chart on SKEW, it looks like dots on a screen, right? Dots on a screen are not exactly going to do it for you. This only gives you end of day. Right? So it's end of day that this is calculated. So you have to put it to a line chart, and they actually got to snap out to the history of this thing, which is, let's go back like 15 years. In fact, the SKEW has not, in fact, even been recorded for 15 years. It's only been recorded really since about 2011. One of the things I wanted to point out, this is one of the highest instances of SKEW, okay, ever recorded. For those of you that have absolutely no idea what I'm talking about in terms of SKEW, what it's actually looking at is the SPX, okay? And again, you can look at a chart all day long in the SPX, and oh, well, the chart's just going up, okay? But what it really looks at is the differential. It's about the 30-day differential, okay, of implied volatility of the out-of-the-money puts versus the out-of-the-money calls. And what you're actually seeing in this particular case, and I just have a handful of strikes open here in the spiders, but in the spiders, you're right at about almost a 21%. Out here in the calls, you're at a 13%. So what the SKEW is actually representing is the differential, okay, between the out-of-the-money puts, the out-of-the-money calls, and the SKEW right now. I mean, lo and behold, the SKEW is huge, right? It's one of the highest levels of SKEW. What that effectively means is there's still a ton of people out there buying puts, like traders. They're buying them. They're buying out of the money puts. They're buying out of the money puts with both hands, right? I mean, look at some of the SKEW out here up to like, 40 some odd percent. They're buying puts with both hands, and they're probably financing those puts by selling out of the money calls. So there is a huge amount of hedging activity, and that's, again, it's represented by looking at the VVIX. That's hedging activity that keeps it that high at 115. It's represented, of course, by SKEW, because the out of the money puts are clearly trading for a premium over to the out of the money calls. And that's why I kind of call it a little bit of a volatility conundrum, because even though the marketplace as a whole, okay, you're like, oh, where's the market going? Apparently the marketplace has been going up, but volatility is still indicating, okay, there's fairly extraordinary amounts of risk. With that, this next week of trade, which is the final week of 2020, hindsight is always 2020. Anyway, with the final week of trade here, we're going to be looking at about a $58 expected move, which is ever so slightly larger. Let's all recall this is going to be a 4-day trading week. It's a full day Monday, Tuesday, Wednesday, and Thursday. Thursday, which is Christmas Eve. Thursday, which is New Year's Eve. Okay. Thursday, which is New Year's Eve, is actually a full trading session, right? It's not like Christmas Eve that is a half a trading session. You should just be aware that we're actually going to get a full, 4 days of trade. In that full 4 days of trade, you're looking for a $58 move. And again, I succumb to the idea that we're going to get every bit of a $58 move. Volatility was still very much alive this previous week of trade. It died out as the week progressed, but look for some volatility to come back, because it's a political show coming into this next week of trade, and that's what's going to drive it. And that's why I believe that volatility conundrum is in very large part probably because of the political, shall we call it, dysfunction. Last, but definitely not least, we're actually going to talk a little bit about the search for gamma squeezes. Spend about 4 or 5 minutes on this. For those of you unaware, I've been talking about this quite a bit. We have had, a number of just wicked moves to the upside. And I'll use Tesla for an example. This kind of movement to the upside in Tesla is it's uncanny. And it's in very large part due to what we term a gamma squeeze. And what a gamma squeeze basically is again, retail clients are going out there, and they're buying calls. So you go out there and you buy calls, right? And I don't care, maybe these are at the money calls, and you buy 10 contracts of them. Like, you're a big shooter. 10 contracts actually in Tesla is a big trade. So you buy 10 contracts of at the money calls. Because you buy those calls, right, that eludes that you are going to be positive delta, meaning you're extraordinarily bullish. Somebody had to sell you those, a market making firm then sold you, They sell those 10 calls. And when they sell the 10 calls, that makes them massively negative delta. Now this is the market making firm. The market making firm doesn't want to be massively negative delta. So what do? They turn around and buy stock. And by buying stock, it actually forces the stock up. But then you come back in there, then you're making money in here, you buy more calls, or somebody else buys calls, and as the stock goes up, it actually creates more negative delta for them, and they turn around and buy more stock, and you actually get caught, You get caught in what we kind of term a gamma squeeze, which is this cyclical move to the upside. And we've seen this in tremendous number of stocks. One of the most important things to denote about the gamma squeeze, liquidity is essential. If there's not a lot of liquidity in the stock, don't tell me it's a gamma squeeze just because the thing is moving up, right? We can look at another one. Lately I was watching like Roku, Roku has had just a wild ascent, but that didn't even make my scan. I built just a quick scan for this, right? And this is a scan on Thinkorswim, but for the most part, I can spend some time here on TheoTrade and explain how this can be done really on any trading application. But here, all I'm doing here is I put in a scan. One of the first things I wanted to show you on the scan is I'm scanning only in stocks that offer weekly options, because if they don't offer weekly options, the liquidity is just not going to be there. So it's got to have weekly options, but that doesn't necessarily mean that it's going to be incredible in terms of liquidity. You're still going to have to get eyes on liquidity, right? The next thing I actually put in a study of price change. The price change is at least 5% greater than 10 bars ago, bars being days. Couldn't be easier than that. Just a nice round number. I want to see us go up 5% in the last 10 days. In addition to it, I actually built a standard deviation channel, okay, greater than 1.5 times the standard deviation, okay, of the 63 period, okay, linear regression line. So I wanted to give myself a little bit of time. You know, you could actually tighten this up a little if you wanted to. And when I say tighten it up, you can actually knock down, all right, the linear regression line, all right, and we can actually knock this, for instance, just the last 30 days. And it's even going to tighten up. Again, it's going to tighten up the number of products in here. But here's more information, for instance, on Grub. Okay, take a look at Grub. All right. Okay, that's the possibility right there. And again, looking at it in a broader chart, that might not necessarily do something for you, but you start to look at it, and yeah, it's actually squeezing to the upside here. Now, if I go back to my scan, again, I preferred the standard 63 in here. Okay, so I preferred the standard 63. I just wanted to show you a little bit of an alteration. Okay, there's 16 products. They've come up. Not all 16 products are necessarily liquid. But when you look at Gamma Squeeze, one of the first ones on the list, come over here and I'll pop in. Okay, this is Activision. That's what we're looking for. Okay, that when I say it's a Gamma Squeeze, okay, effectively what I'm saying is there's a fairly extraordinary number of calls trading in there. And this is light volume. Again, we're looking at like, you know, Christmas Eve type trade. This is light volume, but it's the number of calls that are going out there and being driven, all right, to make the stock actually go up, right? So retail clients come in there, they buy calls, the market makers sell them the calls, and the market makers turn around, buy the stock, shove the stock up. The more the stock goes up, the more the market makers have to actually buy the stock. We get stuck in a cyclicality of a gamma squeeze, right? But you have to make sure you look at something like CrowdStrike, you're like, is that even going to be liquid enough? Look at the move in here, man. Maybe it's over, okay? But this scan will actually help you get to that answer. It will. It'll help you get to the answer. And everything I'm looking at, you'll see the number of calls is extraordinary. And the fun thing about this is that I'm not even scanning on any options criteria at all. I didn't have to. Okay, I was able to actually just find this basically on a couple technical indicators. Because again, I'm the option geek, but I'm telling you, you want to find a little bit of a gamma squeeze to the upside. Here's one Oracle. This one could maybe be towards the end of it. All right. Go through though, start to actually kind of pick and choose and be choosy. There's no reason for you to necessarily have to trade something that isn't everything that you want and more. This is an explosive move again in Shopify. And then of course people are going to ask me, well, then how do you go out and trade this? This could be as easy. And again, we want to avoid any earnings announcements. This could be as easy as going way out of the money and just buying like really, really inexpensive, okay, out of the money call spreads. And this is something I'm going to elaborate on throughout the course, of this week here at TheoTrade. I'll do that live in the chat room come Monday, Tuesday. I'll talk a little bit about gamma squeezes, talk a little bit about the scan that I built, and again, build some trades off of that. Anyway, that's the what I term the quest for the gamma squeeze, and it's on right now. We know exactly how to pinpoint those. Listen, again, I hope everybody has a wonderful holiday, a wonderful Christmas. Thanks for joining us here at TheoTrade. Bye-bye.